Hello everyone, welcome to Optiongig. This is your host Vivek, part-time option trader and full-time worker, husband and father. If you also want to generate consistent monthly income trading options while working in your regular day job, then join me in this journey. Hello everyone and thank you for tuning into Optiongig. I appreciate the time that you're spending with me on this weekend. And I come before you to present you the summary for the week that just went by, week from 16th of December to 20th of December. So without any further ado, let's dive right into it. As always, first thing, the thought of the week. The thought that I picked up for this week is, don't worry about failures. Worry about the chances you miss when you don't even try. Most of the friends that I meet, and when we talk about investments, and when I talk about option trading, they tell me that option trading is difficult, and they have seen some of their other friends and also have read news about how people have lost fortune while trading options. Like I had shared in some of my previous podcasts, option trading is a tool and you can choose the way you want to use the tool. For me, it's like a car. Whether you use the car to reach your destinations quicker or you use your car to drive rashly and crash into a tree is entirely dependent on you. So don't worry that you might end up into an accident when you're driving a car. Be safe. If you drive safely, you will survive another day. But if you just don't even start driving the car just because of the fear of, hey, I might get into a small accident, then imagine what you're missing in your life. Similarly, if you don't even try option trading, just because of the fear that, hey, I might get a losing trade, you are missing the bigger picture. You are missing the control that you can have on your financial future. You are missing the chances that you can actually generate consistent monthly income along with your day job. I have had my own set of failures. A few days ago, I was sharing with some of my fellow option traders that I had learned a $5,000 expensive lesson in the initial part of the year. And after that, I stopped doing one particular strategy completely. But if I had not done any option trading, I wouldn't have even learned that. And for the fear of, losing that money, if I had not even started option trading, then I wouldn't have earned the rest of the money that I've earned on option trading. Of course, I've lost some money in some trades, but I've more than made up for that loss in rest of the option trades. So don't worry about the failures. Look at what is your end goal and how can option trading help you in reaching end goal, and just keep on doing it. There will be setbacks. There will be trades that will go against you. This is a part of trading, but don't give up. All right. Okay, let's move on. Quickly, market summary, how the markets have performed over last week. The broad market index is what we'll look into. So first one is ETF SPY, which is based on S&P 500 index. Again, mostly unchanged for over the week. It opened the week at 319.22 and closed the week at 320.73, just a tad below 0.5% change. So not a big change. The Dow Jones Industrial Average ETF, DIA, or commonly known as Diamonds, opened at 282.93 and closed at 284.46. The difference was 1.53 or just a tad above 0.5%, 0.54%. The technology ETF QQQ opened at 208.50 and closed at 211.71. This in fact did show some movement over this week. The overall change was 1.52%. And lastly, IWM, it opened at 164.06 and closed at 165.97, a change of 1.15%. So overall, the broad market indexes, Dow Jones Industrial Average as well as Spiders, didn't change much, maybe on an average close to 0.5%, but there was some movement seen in technology sector, which changed 1.5%. That was, I think, the biggest change among the broad market indexes, and also some change in IWM. Look at our trade summary, how I did. I actually closed 30 trades over the past week, out of which 25 were profitable and 5 of them were losing trades. Everyone has losers, and if you've been following my weekly updates, every week I have some losers. So, but we just continue to stay in the game, we continue to trade, and we just want to make sure that our losers are not big enough to wipe our gains. But losers will always be there. We just need to know how to manage it so that the overall trading is still profitable. So I had 83% winners, and I also opened 25 new trades. Mostly those will be either adjustment trades or trades for January expiration. I share only top 3 trades in this session, but you can view all the trades on my website optiongig.com/trades. This week I also want to spend some time doing a recap of the opening trades that I had shared in last 2 weeks. So let's look at the opening trades that I had shared for the week between 2nd of December to 6th of December, and see what's the status of that opening trades. So first one was rolling out our GDXJ short put at a strike price of 42 from December to January. I'm not done any change on that one yet because GDXJ is still well below 42. So I will just continue to hold it. Again, this also gives us a protection against if the market melt down. Because if market goes down, mostly there is a flight to safety, and the bonds and the gold rises, and GDXJ is a gold miners ETF, and I expect it to rise. Secondly, it also gives a balance to our portfolio. It gives us some negative delta to balance out our portfolio and not make it too bullish. So I'm comfortable in holding it. My portfolio can manage holding it, so I will continue to hold it as a protection, as a hedge, and also in case the market melts down, it might become out of the money and may expire worthless. So I'll continue to hold it. The next trade is the trade on Slack. I was bullish on Slack, so we opened up 17th January expiration short put at $22.50. I'm still continuing to hold this one. Slack actually has moved lower, but we are not at a risk of assignment right now. And even if I get assigned, I think I will take an assignment and then start selling covered calls on it. My portfolio can manage holding 400 shares of Slack. Again, if your portfolio cannot manage it, then you may want to close this trade before getting assigned, but I can hold it on my portfolio, so I will continue to watch it. If I get assigned, I start selling covered calls. The third trade that we talked about was an iron condor on RSX, which is a Russia-based ETF. It's an iron butterfly. We sold an iron butterfly centered at 24. Now RX has actually made a huge movement in the upward direction, but we anyway had no risk on the upward direction because the width of the call spread was $1, and we have collected $1.64 when we opened the trade. So we had no risk on the upside. I was just hoping to squeeze some more juice out of it, and I thought, okay, let's not be greedy and let's close it at whatever profit we are making right now. And we made some handsome profit on this one. So I'm happy about it. And let's see what RXS does after going ex dividend. I may reopen another trade. Okay. All right. So the next trades that I want to talk about are the trades that we opened between 9th of December and 13th of December. So these were the 3 trades that I had shared with you, and let's look at what's the status of each one of them. The first one was Etsy, a $45 put on Etsy that we rolled from December expiration to January expiration. We had collected $4.81 as a premium. In the last 3 or 4 days, Etsy actually has moved higher, and right now it's close to $44. And this trade is making profit for us right now. Okay. One thing I just want to share is, even though this individual trade, the premium that we got in this one was $4.81, but since we had rolled it from December to January, we actually closed a December trade at a loss. So if we account for the loss that we took in a December, then the net premium that we have gathered in this trade is $3.67. So this is very important, especially for the new option traders. Even I would say, even the traders that you have been doing option trading for a couple of years, on how to calculate your net premium if you are rolling one trade from another. So in Etsy, even though if you look into your brokerage account, it will show you that the trade you had sold at $4.81. But if you add up the losses that you had taken in your previous December positions, the net premium or the net money that you have received for Etsy for selling $45 put for January expiration is $3.67. So I know that my net premium is $3.67, and based on my profit target of 50% to 60% of a max, I might want to look at closing this trade at $1.25 or $1.57. As of Friday closing, the 45 put was trading at $2.25. So I will still hold it. Again, I'm bullish on Etsy. It might go further up. It might expire completely worthless. That would be the best. But if it hits our profit target of $1.25, I probably will close it at $1.25. Okay. All right. The next one I want to talk about is we had sold a wide put spread with $35 wide wings, with a short strike at 540 and the long put short put at 540 and the long put at 505. We had collected $4.55 as initial premium. Stock is currently the situation is profitable for us because ISRG, which is Intuitive Surgical, is trading close to 590, but still it hasn't hit our profit target of 50 to 60% of initial premium. So I'll continue to hold it and probably will close it either when we are close to 21 day to expiration, or if it hits our profit target sooner than that. Third trade that we want to talk about is a short put on spiders. So we had rolled up our 309 short put to 314 short put, and then we had collected additional premium. Spiders continue to go higher and higher. So I had actually closed 314 put, means I'd closed this trade and opened up 316 put. When I closed this trade, I had to take some debit. But if we net out the debit out of this, overall we made a profit of $164 on this particular trade. All right, moving on. Top 3 profitable trades for us. Again, like I said, I had rolled out the 314 short put to 316. Spider continued to stay above 316. It in fact, as I shown in the market summary slide, spiders closed at 320.71. What I did in this particular trade was I actually rolled up 316 to 317, collected additional premium. So for as a part of the rolling up of the trade, I had to close my 316 put, and when I closed it, I actually made a profit of $318 on just closing this put. And then I also opened a 317 put. Again, this is a part of a management. Now spiders are continuing to go high and high, and if they're challenging on our call side, I've been rolling up my puts. So I rolled a put from 305 to 309, 309 to 314, 314 to 316 last week, and this week from 316 I rolled it up to 317. So that's what a trade management is. Next one I want to talk about is Atlassian Corporation, ticker symbol TEAM. Bullish position on team. It was 135 short call, 140 long call, and 110 short put. So it was kind of a, I would say, broken iron condor, or an iron condor with no long put, and we had collected $4.30 as a premium. Stock cooperated, stayed within our range, and on 20th of December it hit our profit target, and we closed the stock at a profit of $246. So when we opened the trade, stock was at 116.98, and when we closed the trade, stock was at 121.56, well between our range, and hence we closed it profitably. Okay, the third one I want to talk about is a vertical put on SPY. So this was a trade that we had rolled up from another trade which we rolled up from 312 to 313 put, had collected additional premium, and this expired worthless because spider was at 320, so 313 put expired worthless, and all the premium that we had sold, we did 2 contracts of it, each contract at $1.19, so totally collected $238. Everything we retained and closed. This trade expired worthless, so all the premium that we had initially got, we retained. So these were the 3 top individual profitable trades. Let's look at the individual losers. Spiders. SPY has been moving up and up and up and up. No respite, no drawdowns on the last week. So we had some neutral trades on SPY, as well as we had some hedges on SPY. So since it was a expiration week, we closed down all our trades, took a losses where we had to, and moved on. All right, so the first one is we closed down our 310, 315 call spread. Again, when we opened this trade, spiders were trading at $301.80. So we went out $10 away and opened a call spread. My logic was that if spiders do not rise, and if this expire worthless, at least I have made some money. But if spider hits rises and I lose this particular trade, I would have made a lot more in my 401k to compensate. That was my logic. As and when spider was rising, we just didn't sit and watch it rising and didn't do nothing about it. We continued to make some adjustments. So even though this individual trade, we lost 758, but we made many adjustments. As I talked about earlier, we made an adjustment of opening a 300 put spread. Then I rolled up the put spread to 304. Then I rolled it up to 309. Then we rolled up the 309 to 314, 316, 317. So we continue to roll the puts up and keep collecting additional premiums. The net impact of those adjustments was that it reduced our losses, and at the end, I exited the trade at a loss of $414. Almost $350 were saved because of the adjustment that we did. And again, I will do this trade again and again if I got an opportunity to do it, because net I made money in 401k, lost money in this individual trade. So this is how you graduate from just focusing on a particular trade to overall your portfolio. Was this beneficial for my portfolio? Of course. That was the reason why I actually initiated this trade, that even if I lose money on it, I have no qualms. I'm not going to lose my sleep. But we also made adjustments to make sure that we can reduce the losses as much as possible. So instead of it being $758 loss, eventually if I calculate the impact of all the adjustments, we lost only $414. Okay. The next one is a similar story as the above trade, the trade that we just discussed. This was again a call spread, 314 and 319 strike prices, a call spread. Same logic that if spiders continue to go high, I will continue to gain on my 401k, even though I am losing money on this individual trade. But we're not sitting on our butts while the trade is challenging us, so we continue to make adjustments even on this one. And after 4 adjustments, we are able to reduce the eventual loss from $710 to $160. Almost $550 loss was reduced because of adjustments. So those who are just starting in option trading, do not let your trade dictate your portfolio value. Learn how to manage trade. The last one was a VIX hedge trade. This was a insurance. I bought an insurance against my portfolio because we have bought 9 VIX with a strike price of 40. VIX is still, it closed the week at $12.50 or 51 cents. Whatever we bought as an insurance premium was never used. So we kind of lost all that money. So we had paid $495 for buying that insurance against our portfolio, and we lost. That premium was never used because market never crashed. It's a good thing. It was a hedge, and that's what the hedge is supposed to do. It's like if I buy insurance on my car or if I buy insurance on my house, I'm not sitting there and hoping that my house burns down or my car meets into an accident so that I can make money out of that insurance. No, that's not the logic. And exactly, this was not the logic here. When I bought an insurance picking up VIX, I knew that I'm investing $495 in it to safeguard my portfolio. But on the back of my mind, I was hoping that I don't make money on this trade. And this is what exactly happened. But it's a loss. So I just wanted to share that with you that, hey, this is one of my top 3 losing trades for the last week. Moving along, now I want to review the top 3 trades that I had opened between 16th of December and 20th of December. The first trade that I want to discuss is the rolling out of short put on Twitter at a strike price of 36. We rolled it out from December expiry to January expiry and collected additional premium. So we started this trade in October, and after we put on this trade, Twitter has been going either down or staying very low as compared to 36. And all we've been doing is rolling it out. We rolled it out from October to November, November to December, now December to January. Total premium that we have gathered, if I include all the premiums from a previous trade, we gathered a total premium of $2.32. So our break even on this trade is $33 68 cents, if my math is correct. So if Twitter goes above this, we make money. If stays below, I will again see if I can roll it. I will roll it out to February expiration. All right. Next one is we open a straddle on emerging markets, ticker symbol EEM. We open for January expiration 44 strike price. When I say straddle means 44 call and 44 put is which sold, and we collected a premium of $1.51. Last one I want to talk about is a Jade Lizard or a broken iron condor trade on Disney. I am fascinated by what Disney has been doing with their movies and their parks. So I want to open up another trade on Disney, bullish trade with a strike price of 140 as a short put. And then on the call side, we have 165 as short call and 170 as a long call. So this is a broken iron condor. I do not have any protection on the put side. On the put side, I just have a short 140 put and no long put over there. The reason is I'm okay to acquire the shares of Disney at cost basis of less than 140. So when I sold this broken iron condor or Jade Lizard, we collected $2.82 as a premium. Stock was trading at $148. So we have given ourselves more than enough room, $8 room for Disney to fall, almost close to 6.5% buffer we have for ourselves. If Disney stays between 140 and 165 till February, we will make $282 per contract on this one. Again, I don't wait until expiration. I have my own profit targets for such trade, and if the trade hits our profit target, we'll close the trade and move on. Okay. All right, so I think that brings us to the end of today's session. Thank you very much for tuning in to Optiongig. Again, if you have any questions on the trades that we discussed or any questions on your trades, feel free to write to me at optiongig@gmail.com, and I'll be very happy to help you out. It's always great to get a feedback from listeners and viewers. So if you have any feedback, please be generous, and my ears are always open to get your feedback. All right, thank you very much. Happy holidays, Merry Christmas, those who are celebrating. I will be traveling and may or may not be able to put out the next weekly summary, but we'll see. And I hope each one of you take some time off from your work, from your job, or whatever you do. Spend time with friends and family, get recharged for the next year. So happy holidays and wish you the very best of 2020. Please note that all the information presented is purely for educational purposes and is not a financial or investment advice. I don't know you, you don't know me, so do yourself a favor and don't invest or trade solely based on what you hear.